Hey, I wanted to do one more updated video on IBonds. This has been something that's been growing in popularity over the last year or so. It's a government issued bond that's linked to inflation, so no wonder it's grown in popularity. Even when you go to the government website, it's pretty clear. You can see right here, you can purchase IBonds at the current rate through October of 2022. That's part of why I wanted to do this video, is because it's as of recording this, it's the end of September. We're getting into October, and the current rate is going to be changing. So if you want to get the current rate, you got to get in there soon. Unfortunately, this is not something that we can go in and directly buy for the families that work with us. So this is meant to kind of walk you through what is it, why is it relevant, how do I actually go ahead and purchase one. So let's start there. The whole point of these IBonds, if you've looked at previous videos or done any sort of research, is it's a government issue bond, but the letter I is for inflation. So you are linked to what's going on in the inflation world. Technically speaking, these have what's called a 0% coupon rate, meaning it's the worst you can get is a 0, but it's a plus whatever's going on in the inflation world, which is why right now it's paying 9.62% guaranteed. That's if you buy one here before the end of October. And the whole point is, again, you are linked to what's going on in the inflation world. So if inflation is going up, as it has been of late, you make a positive number. But if we are in a deflationary environment, meaning the value of the dollar is going the other way, the worst you can get is a 0. So that's how these things essentially work. You are given a positive side, a positive interest rate when an inflationary environment presents itself. And right now is at 9.62. But what happens is you get that for the first 6 months of owning your IBond. And then every 6 months, they adjust the interest rate. Now, that adjustment in the interest rate is going to be happening in the beginning of November. That's why they say you can only buy this until the end of October. But even if you buy it today on September 28th, or if you buy it on October 27th, you're getting a 9.62 for your first 6 months of owning the IBond. So for that first 6 months, you're getting that 9.62. Now, the catch here is with these IBonds, they are government issued bonds. So assuming the government doesn't go under, your principal protected, but they are 30-year bonds. You do not need to hold it for 30 years. You do need to hold it for at least 1 year, though. But what happens is if you don't hold it to term, just like in a CD, they slap you on the wrist with an early withdrawal penalty. And what they do is if I hold it for only 1 year, the penalty is the last 3 months of interest. So with the new rate, so let's just say we get this 9.62 for the first 6 months, and the latest projections are dropping it down somewhere between 6 to 7% is what the most recent projection I saw for the new interest rate for the IBonds come November. So that means your second 6 months, let's just go on the low end and call it 6%. If I hold it for 1 year and I sell it back to the government, I'm penalized those last 3 months worth of interest. So that's a big drop off from 9.6 to 6. So that's a 3% drop off. So that's part of why the urgency should be there right now. You also have to create an account, which you're going to talk about in a second, through treasurydirect.gov, which is a government entity. So if you actually want to do this, now's a great time to go on there and start that process, because I've seen some people be able to get it set up within minutes. I've seen other people where they have to snail mail you a letter to verify your identity. You got to return with a W-4. It's not complex, but it's time consuming. It's a simple process, but for some people it can be time consuming. And if you need to have it funded by the end of October to get the 9.62, now's a good time to be starting that process. You don't have to sell it back after a year. This is part of where inflation is a thing that we're all dealing with right now. I don't foresee it disappearing overnight, but it's certainly not going to be here forever. So we can look at this from a perspective of, this could be a 1 or 2 year time play. This thing, though, it is a government issued bond, but what they do is they limit you to $10,000 per person per year. And it's a calendar year. So if you are a husband and wife, that's the other side of this. You can only do $10,000 for the husband, $10,000 for the wife. basically a total of $20,000 for the year. You can gift if to family members. You can set it up for minors if you have minors or dependents at home, but it's per calendar year. So with this new rate we're going to get in November, you can put money in there, and then come January, you can still add in another $20,000 at whatever that current rate is for November. So you're limited at $10,000 per person per year. So it's not like you go out there and throw all of your money into it. You also are restricted to what's called non-qualified assets, meaning you cannot use a 401k, you cannot use an IRA, you cannot use a Roth IRA, you cannot buy these in a TSP. Right? It has to be money. Essentially, they want to EFT, they want to transfer it straight from a bank account is what they want to do. So you basically use cash from your bank and deposit it into the IBond itself. So keep that in mind when looking at it. That's how these things actually operate. You fund it with cash from the bank is the simplest thing to do. But that's where it fits, is it fits in if you do have some what we call dry powder, some cash sitting around. You don't deplete your emergency funds. Keep in mind you got to hold it for at least a year. You don't deplete your emergency funds, because Lord knows if you do that, a tire's going to pop, transmission's going to blow, something's going to happen. But this can fit if you've got a chunk of cash sitting on the sidelines in a non-qualified account, in a bank account that needs something that's guaranteed, especially with the way the market's been behaving. There's nothing out there that can guarantee you 9.62%, even over a 6-month time period. We have seen CD rates, we have seen fixed rates in general come up, and other linked accounts, the rates have been getting better and better with these raises that the Federal Reserve has been doing. But still, this is the best deal out there if you want to hold it for a year. You do some math on, if I get 9.62 for the first 6 months, and let's just say I get 6% for the second 6 months, you still end up with about 7% for the year, even with that penalty if I only hold it for 12 months. So that's how these things are designed to work. You make money assuming that we're in an inflationary environment, but you have to buy it from the government. So the website is treasurydirect.gov, treasurydirect.gov. And like I said, you can see on here that people are buying it. It's a big piece that is being advertised out there. As soon as I go to the website, it says you can purchase IBonds here. They have their own guided tour and videos walking you through how to buy them, but you can click on a how to buy IBonds link, which is down here in the bottom right. You can actually click on this big old picture, and it takes you to the information on IBonds themselves. So you've got on here the first 6 months you own it. Right now it's paying 9.62. A new rate is set every 6 months based on the fixed rate of 0 and on inflation. It walks you through down here. You can buy them in electronic form. You can buy them in paper form only if you use your federal income tax refund. It tells you can only do $10,000 a person. But essentially right here, this first line is, how do I buy IBonds? Buy them through electronic version through Treasury Direct. You're going to click on this. Some people I've talked to already have an account. You can just click on click on login now. You enter your username and password. Most of us, though, need to go through open an account. And it's going to ask you for your tax ID number, social security number, your email address. And then, like I said, they want to have a bank account to fund that bank account and routing number. So that's what you will need to open up an IBond account through treasurydirect.gov. But it's really straightforward. You're going to click apply now. You're going to go through, you're an individual. That's what most of us are. None of us are entities. We're not corporations, deceased, estate, any of that kind of stuff. So we're an individual. We click submit. We enter in our personal information, certify that this is you. You are indeed actually who you say you are. You click submit, and then it'll walk you through step 3, which is funding the actual account and verifying your identity. So it's pretty simple to actually go through it. It's just knowing some of your initial information. Some of these have stars on it. That means you have to do it. They actually don't need your state ID number, but it does help verify your identity so that you can avoid some of the other hiccups that some other families have seen. So I'm going to want to reiterate, now is a good time to act on this. You have to go through treasurydirect.gov. A financial professional cannot buy these for you. You have to go straight through treasurydirect.gov, create an account, and now's a great time to do it because the rate is changing, dropping by almost a third, essentially, is what we're looking at is with the new rate. So again, wanted to get this out from an information perspective. You can call us if you want to see how this affects your plan. If this is a good idea, it's really best suited if you've got extra cash sitting in the bank account, sitting in a savings account. ready to be deployed, and you want to have something that actually is going to go up at this stage of the game. So again, if you have questions about your plan, lean into our team. Happy to help. But I wanted to get this out to y'all so that you have some information on how to buy IBonds, how do they work, where do they fit, and what it looks like in the grand scheme of things. So thank you all for listening.